Hello and welcome back to Boni's Life, your home for the most advanced and insightful analysis of the crypto universe. As we stand at the threshold of a new year, it's time for our much anticipated 2025 year-end review. We'll dissect the turbulent currents of the crypto market, focusing on the pivotal months of November and December. We'll explore what moved the markets, why assets reacted so dramatically, and which of our predictions held true. And of course, we'll run our signature $100 investment test. How would you have fared if you had joined us on this journey? Let's find out. November 2025 will be remembered as the month of the Great Correction. After a period of sustained bullish momentum, the market took a sharp downturn. Bitcoin, which had been flirting with the $100,000 mark, saw a significant retracement, closing the month at approximately $90,838. This represented a substantial 17.67% drop from its October highs. So, what triggered this sudden shift in sentiment? The answer lies in a confluence of factors, both technical and fundamental. From a technical standpoint, Bitcoin was facing immense resistance in the $98,000 to $100,000 range. The moving average convergence divergence, or MACD, a critical momentum indicator, signaled a bearish cross, suggesting that the upward momentum was waning. This technical weakness was exacerbated by a break of a multi-year uptrend, a significant event that signaled a potential long-term trend reversal. The market was, in essence, overbought, and a correction was overdue. On the fundamental side, we saw a significant increase in profit-taking from institutional investors. After a strong performance in 2024 and the first 3 quarters of 2025, many large players decided to cash in their gains, creating significant selling pressure. This was compounded by a wave of liquidations in the derivatives market, as over-leveraged long positions were wiped out. The total 24-hour liquidation volume frequently surpassed the billion-dollar mark, a clear sign of market distress. Ethereum, the second-largest cryptocurrency, also felt the chill of the crypto winter. It ended November at around $2,992, a noticeable drop from its earlier highs. A key factor contributing to Ethereum's decline was the massive outflow from spot Ethereum ETFs. In November alone, we saw a staggering $1.42 billion in net redemptions, the largest monthly outflow since these products were launched. This indicated a significant loss of confidence among institutional investors who were now seeking safer havens for their capital. December began with the market still reeling from the November correction. Bitcoin continued its downward trajectory, finding a temporary bottom around the $87,000 support level. The question on every investor's mind was, is this a genuine buying opportunity or a dead cat bounce? The answer, as is often the case in the crypto market, was not straightforward. The most significant event in December was the Federal Reserve's decision to cut interest rates by another 25 basis points on December 10th. This marked the 6th rate cut since September 2024, bringing the target rate to a range of 3.50% to 3.75%. In theory, lower interest rates should be bullish for risk assets like cryptocurrencies, as they make borrowing cheaper and encourage investment. However, the market's reaction was lukewarm at best. The Fed's accompanying statement had a hawkish tone, suggesting that future rate cuts were not guaranteed. This ambiguity did little to inspire confidence in a sustained market recovery. Another major factor at play was the evolving regulatory landscape. The Trump administration, which had been largely supportive of the crypto industry, continued to push for a favorable regulatory framework. The Genius Act, signed into law earlier in the year, and the establishment of a strategic Bitcoin reserve were seen as positive developments. However, in early December, the SEC introduced new transparency rules for crypto exchanges. While aimed at protecting investors, these new regulations created a sense of uncertainty and fear in the market, contributing to the downward pressure on prices. Adding to the market's woes was the dramatic collapse of Eric Trump's crypto firm, American Bitcoin Corp. The company, which had been a symbol of the Trump administration's pro-crypto stance, saw 40% of its value wiped out in a matter of days. This high-profile failure sent shockwaves through the industry, further eroding investor confidence. By the end of December, Bitcoin was trading at approximately $87,800, a slight recovery from its monthly lows, but still a far cry from its all-time highs. Ethereum followed a similar pattern, closing the month at around $2,975. The market was in a state of flux, caught between the hope of a new bull run and the fear of a prolonged bear market. Now, for our signature segment, the $100 investment challenge. If you had invested $100 in Bitcoin at the beginning of 2025, when the price was hovering around $100,000, your 0.001 BTC would now be worth approximately $87.80. That's a loss of $12.20, or 12.2%. Not a catastrophic loss, but certainly not the spectacular gains many had hoped for. If you had chosen to invest your $100 in Ethereum at the start of the year, when the price was around $3,500, your 0.0286 ETH would now be worth approximately $85. That's a loss of $15, or 15%. Again, a disappointing result, but one that highlights the inherent volatility of the crypto market. What if you had followed our advice from the November and December episodes? In November, we identified the key support levels for Bitcoin and warned of the potential for a significant correction. We advise our viewers to be cautious and to avoid over-leveraged positions. Those who heeded our advice would have been well positioned to weather the storm and even to accumulate assets at lower prices. In December, we highlighted the potential for a short-term recovery following the Fed's rate cut, but also warned of the underlying market weakness. We suggested a strategy of cautious optimism with a focus on long-term value rather than short-term gains. Those who followed this strategy would have been able to navigate the choppy waters of the December market without suffering significant losses. Looking back at 2025 as a whole, it was a year of contradictions. We saw moments of incredible bullishness, with Bitcoin reaching for the stars, and moments of deep despair, with the market in a state of freefall. The year began with a sense of optimism, with many analysts predicting a new all-time high for Bitcoin. However, the market failed to live up to these expectations, with Bitcoin ending the year down 12% and Ethereum down 15%. One of the most striking features of 2025 was the decoupling of crypto from traditional markets. While the S&P 500 and other major indices reached new highs, the crypto market languished. This suggests that investors are becoming more discerning and are no longer willing to blindly pour money into the crypto space without a clear understanding of their underlying fundamentals. Another key trend was the growing importance of regulation. The actions of the SEC and other regulatory bodies had a significant impact on the market, and this is a trend that is likely to continue in the years to come. As the crypto market matures, it will become increasingly subject to the same rules and regulations as traditional financial markets. So, how did Boni's life fare in this turbulent year? I'm proud to say that our analysis has been consistently accurate and insightful. We correctly identified the key market trends, warned of the potential for a major correction, and provided our viewers with the tools and knowledge they needed to navigate the volatile crypto market. Our predictions were not based on hype or speculation, but on a deep understanding of the technical and fundamental factors that drive the market. We have always been transparent about the risks involved in crypto investing and have never shied away from telling our viewers the hard truths. We believe that our commitment to providing high-quality, unbiased analysis is what sets us apart from the crowd. In a world of so-called crypto gurus and moon boys, we are a voice of reason and a trusted source of information. We are not here to promise you overnight riches, but to help you make informed decisions and to build long-term wealth. As we close the book on 2025, we are left with a sense of cautious optimism. The crypto market has been through a difficult year, but the underlying technology remains as revolutionary as ever. The challenges we have faced have only made the industry stronger and more resilient. We believe that 2026 will be a year of rebuilding and consolidation. The market will continue to be volatile, but we are confident that the long-term trend is upward. We will be here every step of the way, providing you with the insights and analysis you need to succeed. Thank you for joining us on this journey. We wish you a happy and prosperous new year. Don't forget to like, subscribe, and hit that notification bell to stay up to date with all our latest content. Until next time, this is Boni signing off.